Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast.
Hi, I'm Gemma Mitchell and welcome to this episode of the Australian Finance Podcast. These Wednesday episodes are designed to be bonus episodes, short, sharp, shiny, just to keep you going between our longer episodes that go out on a Monday and the Q&A sessions that Owen and I do every Friday where we answer your questions. Today's mini episode going out on your Wednesday is a second part to the money reset. So a couple of weeks ago, we had a short episode go out, which was steps 1 to 6 of my book, The Money Reset. So if you're not going to buy the book, you don't want to listen to the audio version, it gave you a sneak peek into what that was and some different actions and things. So today we're going through the next 6 on there. We're going through steps 7 to 12. This one is all about building momentum, future-proofing your finances, and finding some financial flexibility. I think everybody kind of focuses on financial freedom, which is great, but I'm going to go through why financial flexibility should be what you're aiming for. So let's get into it. We're up to step 7. This one here is all about doubling down on debt. Debt can feel like it is a weight. It can feel like a really negative thing, but debt is just a tool, and it's how we use it that makes it either help us build wealth and get out of tricky situations, or it can hinder us. So it's about understanding how it works. In this chapter, we dive into all the different kind of debts and how they work and how they could help or hinder. But we also dive into what the 2 simplest methods are, or the most common, I should say, methods are that you'll hear in the finance world. And that's the snowball method and the avalanche method. And this is where if you've got multiple debts, how you can kind of tackle them to be as debt-free as quickly as possible. Both work. It just depends on which one suits you and your personality. So the snowball method. So imagine you've got a list. You've listed all your debts in, and that might be buy now, pay laters, credit card, personal loans. It might be loans to friends and family. Maybe you've got a bill left over from the local shop. You know, when we used to have video hire fees like Blockbuster, and you'd have to pay off all your late fees. So whatever debt it is, anytime that you owe money, you would put it down on this list. So the snowball method, you would organize that list from lowest, so the smallest amount of debt, to the highest. And the idea is that you focus all of your surplus income on paying off the lowest debt first. This gives you quick wins and you can see progress. The other way is avalanche. And this is where you would organize that list of debts in terms of what the interest rate is. So one might be an interest-free loan. One might have a 3 or a 5% interest rate. One might have a 15% interest rate. So you would put them in largest to smallest, which is costing you the most in interest. So mathematically, this makes sense for you to focus on the one that's costing you more. But from a psychological motivation, this can be a hard slog for a lot of us. So it really depends which one, because that might actually be your biggest debt. So you're focusing on your biggest, it might feel like you're not making as much progress. So this one works on a spreadsheet, it works in calculations, it's one that should, make the biggest difference to you. But from a motivational perspective, we can see people get a little demotivated when they're not seeing those quick wins, being able to take things off their list. So knowing both and knowing how you work, and maybe you have a hybrid approach. Maybe there's some small ones that you can get rid of quickly and then do the avalanche approach and then tackle the highest interest. So this one is all about you being really, really clear. So your actions are to organize, to find out what all your debts are, write them down and work out which way is going to be how you tackle your debt repayment. And this is a perfect time for you to be doing this because we're nearly in a new financial year. It'd be great for you to be really clear on what your focus is for 2026 and which debts you're going to tackle. Step 8 is planning your property path. So for Australians, we love property. A lot of the time it feels like the ultimate goal, but there is a real question on whether home ownership actually suits you at your stage of life and your values right now and what else you've got going on in your life. Do you need property to build wealth in Australia? Absolutely not. Does it help? Yes, it can, but it can also hinder. So you being really clear on what property suits you, when and why, and having that flexibility in to adapt. So maybe you bought a family home to live in, a principal place of residence, so you could get the first homeowners grant, but maybe it doesn't suit you long term. So you would want that to either be something that's a good investment that can be rented out or could be sold. You want to always be thinking about, if this house is not your forever home, if this is not the house that you plan to be in for the rest of your life, you want to be really clear on what it is, what its function is, what purpose it serves, and is there room for it to change? Could you live in it for a while and then it become an investment? Do you actually need to even own the house that you live in? Could you be a rent investor? Does renting actually make sense for you and not having property at all and being, a share investor? So with this one, your action is just to start questioning why that is your plan. A lot of the times when we see people getting into their first home or feeling like property is safety and security to them, it can be from a place of that's all we've seen modeled. So I really want you to, if you're thinking that property is for you, or you're thinking maybe you've got property and you're considering if it's the right one for you, really dive down into what property means to you. Safety, security, is it lifestyle? Why? Knowing why will help you kind of come to the decision on which is the best path for you. Step number 9 is about maximizing your superannuation. Now, if you already listened to the podcast, you will know that I am absolutely obsessed with super. I love it. I think it is so important, and it is the cornerstone for most of our retirement strategies. If you've been working in Australia, you likely have superannuation. This is money that has been swiped out of your pay that you have worked hard for and put into an investment vehicle, a tax-effective vehicle for you. So you want to take notice of this money. You want to know what it's doing, how it's performing, all of those types of things. So we don't want you to get to 50 or 55 and then start thinking, oh, I better learn about super and work out what's going on with mine. The earlier that you treat this like your money, the better off you and that super is going to be. So if you know where your super is, that is great. I want you to log on to the fund, log on via the member page, just have a look, check your balance, your investment options, look at contributions going in. Just at least once a year, you want to be engaging with your super fund. You might call them and ask questions. You might have a financial planner that looks over things for you. But just having that check-in every single year is so critical. And you should have a reminder in your diary to do this so that it's absolutely just something that you do every single year, like housekeeping. If you're not sure where your super is, these balances are always kept by the ATO and they would have just been updated in August. So it's the perfect time to check. So you would go to your MyGov account, you head over to the ATO portal that's linked via there, and there'll be a drop down that says superannuation. There they will have a record of where your super is and the balance as of the last 30th of June. So that is a great place to start. You'll get the details there and then you can contact the fund directly, get your latest statement, maybe get some logins and things so you can start checking in on it every single year and being on top of it. Step 10 in the money reset is all about planning for the unexpected. And just like how much I love superannuation, insurance is there as well. So this chapter is all about insurance and wills, estate planning, those types of things. So before you think this is a little bit boring or doesn't apply to you, yes, you need a will. Even if your situation is so straightforward, there is likely assets that you have in your name, whether it's a bank account, a car, whatever it is. Even if it's super straightforward, you need a will. It is an absolute nightmare for your family if you don't have a will. Them trying to close accounts, close, subscriptions, close bills, utility bills and things. Having a will for your family, even if it's very, very basic, is a gift to them. So yeah, and chances are you might have some insurance or things that make that estate a lot bigger if you were to pass away. So having a will is really important, and there's lots of different ways that you can do it, but you should be doing that. Then on the side of insurance, again, if you listen to the podcast, you know how passionate I am about insurance and making sure people have the right cover. If you don't have insurance that you've applied for yourself actively, maybe saw a financial advisor or applied for through your super fund, chances are you might still actually have some cover that is in your super and that's coming out, you're paying premiums that's actually eating away at your retirement savings. So it might be actually the right cover for you, but you want to make sure that if you're paying for insurance, it is the right cover, you're aware of what it is, you've done the right thing, everything you can to make it cost effective as possible. So no head in the sand with this. When you're looking at your super, you should be looking at insurance, and you should also be proactively making sure it's the right cover for you. So the step will be, make sure you have a will and your super beneficiaries are up to date, and also check in on your insurance. Every single year you should be checking your insurance, not necessarily to change providers, so change insurance companies, because there's lots of, complexity around that, but it might just be to check that the level of cover's right. Maybe as you build assets, you can actually start decreasing your insurance every few years to reduce your premiums, as you don't need such high cover anymore. So super, insurance, wills and estate planning is not set and forget. Step 11 is all about protecting your financial future. And when I say this, it's pretty common that people's thoughts will go to estate planning and insurance, but there is so much more to it than this. So when I talk about protecting your financial future, a lot of the time, I actually think that once you've got those other fundamentals done, that it should be about how you communicate about money with the people around you. So this chapter, I actually dive pretty deep into how you communicate with loved ones around money, because it can cause a lot of stress. It can be a big conflict in relationships. So whether you've been with your partner 12 months or 20 years, it is never too late to change how you communicate and how you manage money and adapt and grow and create a healthier relationship. So we dive into ways that you can do that, because, it's such a major conflict in a lot of relationships we see. But it might actually be that you're going into a new relationship and you've gone through your money reset and you've got all these, independent habits and really strong foundations. How do you then go into a relationship and create a healthy money relationship, but keeping some independence and all that stuff as well? So this one is quite a big chapter. There's a lot to it. And I also dive into, well, how do you speak to other generations? How do we talk to our kids about money to create healthy money mindsets and healthy habits? And potentially we need to be talking to our parents about money. So this is all in this chapter. This is big on healthy communication, clear boundaries, safeguarding yourself, your peace, but also your finances. And it's all about protecting those foundations and being a really solid team with the people around you that your money is intertwined with. Finally, step 12 of the money reset is about financial flexibility. So it's actually intertwined. So it weaves through every single step. Absolutely does, but I just wrap it up in the last one. So it's not so much an action, it's more just that wrap up, clarity, and showing the importance of moving forward. So a lot of the time in finance, we hear so much about financial freedom, the ultimate goal, having this pot of wealth that can fund your life so you don't have to work. And that we call financial independence or financial freedom. That is an excellent goal to have. It is absolutely brilliant, and I love when people know what that looks like for them. But depending on your current situation, what's happened in the past, where you're at right now, that might feel like a completely just out of reach. It might be that you don't know what life looks like in the next 6 months, let alone 6 years, let alone 30 years, to have this kind of big, audacious goal. So I talk about the importance of financial flexibility, moving forwards, making decisions, even though you don't know what life might look like. So if you can't pinpoint your ultimate financial freedom goal, that is totally fine. You want to do what you can within your capacity to build wealth so you have choices that when you do know what life looks like or what that ultimate goal is, you're already well on your way to building assets and wealth that can help you achieve it. And you're not just starting from scratch then when the fog kind of lifts. So this chapter, we just pull everything together that we've already learned, but I really encourage you to not put so much emphasis on massive goals. And sometimes it's okay just to do what's in your capacity right now and build wealth that is flexible. So as you change and as life gets clearer, you can just pivot and slowly make these little course corrections, but you are still making steps to a really, really solid financial future. And that should come with financial freedom eventually as well. But let's not put so much pressure on ourselves to know what that looks like if you're going through a really tough spot and you can't see the months ahead let alone the years. So that is the final 6 steps of the money reset. If you want to read the book, you absolutely can. You can get it from the library. You can get it from bookshops. I'll put it in the show notes. If you're on things like Spotify or Apple, you might even be able to get the audiobook for free. There are lots of ways that you can do this. But even if you're not going to read the book, if you resonate with one of those steps, I would encourage you to start focusing on that. We don't want to wait till 2026 for a fresh start to start working on the things that are bothering us or the things that we want to improve. Now is the best time for you to get motivated with what's going to be your focus for the new year, and start early. You don't have to do them steps 1 to 12. You could absolutely just pick the one that is causing you the most stress right now and focus on that area. But thank you so much for listening to this episode on the Australian Finance Podcast. Next Wednesday, we'll be back with another short episode, 10, 15 minutes, just to keep you going throughout your week. See you next time.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.